Now, on Friday, we saw a little bit of selling occur at the end of the day towards the S&P and the Nasdaq, but ultimately we saw some buyers hold us where we were at. Now, in my opinion, I want to make this very clear before we go into charts or anything like that. I still believe this is a good opportunity broad-based on the market. I do think going into the end of September, into October, you might see some selling just due to the election and what's going to be happening there. But ultimately, I think what's happening based on Fed policy and the broad market, that you're in a good position. Now, that being said, people are like, what do you think is happening with manufacturing, with jobless claims rising, unemployment rising? These are things that we expected to happen. Now, for people saying that a massive recession is coming, I would question and I would wonder if you think that that massive recession is going to directly impact the S&P 500, right? That we think this massive, layoffs and jobs and this and that is going to, destroy the S&P 500. I would ask, go look back in history how many times we've seen a 25 to 30% drop on a base index and then another massive 25 to 30% drop happen within the next 2 to 3 years. That's what I would ask. And again, I'm just a fan of the data there. Now, the other side of this as well is we're going to look at what really quantifies a recessionary period and kind of the rules surrounding this, because I do believe it's very interesting when we start to attack these viewpoints as well. Let's get to it. Okay, so the first thing I want to do is go over the chart just very simply, and then we're going to go into more fundamental viewpoints here. Now, when we look at the chart, this is November 2021. This was really the recession on the S&P and the Nasdaq, the stock market related issues, right? You maybe didn't feel it as much at home, but this was more of the actual recession that we had based on stocks, okay? This is your high, 18.2, your previous all-time high. Now you're coming back into that level right here, and your 200 SMA on the daily time frame, which you've held since you broke back above it in March 2023, which you broke and mounted back there. That's the big bullet points right now. So if I had to say anything in order to get bearish or to really view the market of, hey, man, a recession or, the stock market might collapse another 2,000, 4,000 points, whatever. You break below this level. You break below this level and you're very concerned. But the viewpoint that I'm coming from here is a risk to reward standpoint. And what does that mean? Very simply put, for anyone that's new here, right? If I'm buying at this level, my stops are pretty tight. Granted, that's like 100 to 300 point stop loss right there, right? But my profit target are back into local highs of where we're at and really seeing if we're going to get that bounce with rate cuts, etc., right? So a risk reward standpoint, that's where you come from right there. There's no reason to go short at this point because you're coming into obviously a support or a resistance, however you want to view that, right? You can invert the chart if you really want and get a better viewpoint. Sorry, I'm on my Mac, so I don't know the exact controls here. There it is, Alt I or Option I here. And you can see they're just coming back into that. The same thing's here. I wouldn't be going long on this chart if we were coming into a resistance, right? So it's the same thing. Sometimes it helps to flip it over. So that's what we're looking at right there. We'll come back to this here in a second. Now, broad-based, what are some concerning things happening right now? We had manufacturing and job claims that were signaling potentially a recessionary period. However, you have to assume that rate cuts will greatly stimulate the market because we haven't seen rate cuts in over like 2 years now, okay, worth mentioning. So the other point here is what's happening, and I don't want to make this the focus of the video because I feel like there's something always happening here in the Middle East, and it's just like if you focus too much on something, I think it becomes an issue. And I will say it's escalating more than it has been, okay? So there's a lot of theories from, Israeli news sources and Israeli intelligence that they're getting closer to nuclear weapons. I don't want to go into that again. But again, you're seeing the U.S. sending troops, sending more and more aircraft carriers to that region. So worth watching. Definitely a little bit concerning there as well. Okay, going to let you know. Now, this is the part that I really want to talk about. The Sahm, maybe I mispronounced it, the Sahm rule. Okay, this is one of the biggest rules that signifies a true recession in the market. It's not based on charts. It's based just purely on statistics, and it's been very, very accurate going back to 1970. Now, I will say it's worth mentioning that the man who invented this rule or identified it, he said this could be very different. Now, why? Let's first explain what happens here just so you can understand, okay? Every time that the 3-month moving average of the U.S. unemployment rate has is more than half a percentage above the lowest 3-month moving average from the previous year a recession has soon followed. Now, this is a very I've thought a lot about how to explain this to you, okay? But very simply, okay? Your average for the last year unemployment rate was 3.63. Okay, let's understand that. You have been above, and as long as you're 0.5 above that for 3 months, it signals a recession. Okay, so anything above 4.1 basically. And so you've been at 4.13, now you're at 4.3. For the past 3 months, this number has been rising. Okay, so this in theory quantifies that rule. Now, what's the major caveat there? Is that 3.63 was the lowest our unemployment rate has been in years. I mean, decades, right? Very important to understand that. The other part here is that who was anticipating that unemployment would rise to these levels? You know, who has been saying this for 2 to 3 years? And it was kind of like, we can't believe the unemployment rate isn't rising, right? Remember who? The Fed. Okay, so I just want to point that out very, very quickly so we understand that. So unemployment is where the Fed has wanted it to be. And they've said that it actually can get higher and they would still be fine. Fed's words, not Tyler's words. So that's a very important thing here. Now, I'm not going to ignore this and say that this isn't happening. Like I said, I think the chart will confirm this potentially if you get below the 200 daily moving average. Because we know when you break below the 200 daily moving average, there's a high possibility you come down to that 200 weekly moving average. It's happened a lot in the past. So again, those are things that we want to focus on. And again, if you want to go back and just look at the importance of this level, and I'm all about data and what happens here and following that data, look at the rejections that we've had here, right? I mean, really look at these rejections that we had over that past whole 2022, basically, right? 1, 2, 3, almost 4 rejections. We can't even get back into it, but massive rejection. So that's something that you have to be following and paying attention to. And that's all I'm doing here, guys, right? I'm just saying, right here, it's looking like an opportunity. Right here, not so much. You see how the things, there's a clear line, right? Clear line. So those are things to understand. I think that there's a caveat, and his caveat here is that, yes, the unemployment rate has been at its lowest rate in decades, okay? Worth mentioning. And if anything, if this was going to be a hard landing, as the Fed puts it, you would have expected unemployment to rise quicker, okay? Also, too, you have to expect rate cuts to happen, so unemployment will probably regulate towards the end of the year, most likely. And then we'll talk about the stimulating of the economy, et cetera, later. Now, going into some of these stocks as well, a few, especially the ones that I mentioned on Friday. It's like when I mentioned them, a lot of bad news started coming out, right? So I want to go into this. I'm a little bit all over the place today, but we're going to just play it by ear. Hopefully you guys get something out of this, okay? So NVIDIA. So NVIDIA, I still think it's one of the best buys. I think from when I mentioned it on Friday, you've gone up, obviously, so that's cool. Now, NVIDIA, if you don't know, there's a lot of bad news, right, coming out, supposedly. And so far, it's rumors, okay? So there's these rumors coming out now that they're delaying their Blackwell chip. Now, I don't know if this is true. We'll know at their earnings. So I think the earnings is April 28th. So that's the big news here. And this is the driver of their growing revenue right now. So that could be a giant hiccup in the road. Now, again, we have not seen NVIDIA CEO or the staff come out or anyone in the higher ups of the company. So that's important to understand too. That does come out. I do think that maybe even Monday morning you see some downside here. All the way down to the 97 though, I think NVIDIA is a buying opportunity. And I truly believe NVIDIA is the best longer term play at this point down here. Personal opinion, okay? Understand that. And I'll be paying more attention and posting this on Twitter too as I see updates. The next one was Apple. And Apple was more of that. It was really interesting what we saw here, okay? So we saw Apple push into, middle of the day to like 225. Then you pop down to the end of the day and you're 220 and you're kind of sitting there. Above 220 look good, under 220, not so great, right? Now what happened here is that Warren Buffett started selling, and it was announced that he sold half of his total Apple positions so far, okay? Now this is the part that people need to really understand, right? Because people paint this picture like, okay, he just sold all of his stock right here. Now, I want to show you where Warren Buffett sold his stock. Okay, this is the really interesting part that, you have to make a decision for yourself, right? He was selling his stock from here to here. This is where Warren Buffett has been selling 50% of all of his shares. Okay. locally in this part. He didn't sell them right here. He did not. They were already reported. So this is where he sold them at. Okay. Now, we've seen stocks like Amazon being held down at $200 because Bezos is selling an ungodly amount right now. I'm just curious though. Does it appear that there's maybe some buyers on the street of this stock right now? Right? And does Buffett believe it's a bad longer term play? Also important to understand what's happening with this person as well, as far as Apple's one of their largest shareholders of all time. Okay? If you don't know Charlie Munger, he died this past year. Buffett, 93 years old, probably going to die the next few years. Just saying. I don't wish that upon anyone. It's probably going to happen. He also restructured what's happening with his inheritance, his will, etc. We've seen what happened. Go Google what was happening with the donations to the Bill and Melinda Gates Fund, right? This was all news this year, okay? Buffett said, and this is 3 months ago, he revises his will every 3 years, and he still advises that his wife allocate 10% of her inheritance to short-term government bonds and 90% to a low-cost S&P 500 index. One question you're wanting to know, whether the current weighted average of the Mag 7 stocks with the S&P 500 would move Buffett to consider shifting his allocation. Buffett said, given the amount of money in the trust, my wife doesn't need to worry about whether her portfolio beats the S&P 500 or not. In my opinion, I think he's taking more risk off the table. He's near the end of his career. He also, those are my opinions, right? I think he's setting up for Berkshire to do what they're going to do next. Again, my personal opinion. Now, again, it's worth mentioning, since he has cut Apple over the past few months, because he was already cutting Apple 3 months ago, Apple has risen another 20%. Worth mentioning, okay? So definitely food for thought. Again, I'm just playing devil's advocate here, things you have to think about. I'm not telling anyone to buy YOLO. These are just my top plays up here, right? Just based on earnings and what they're doing. So things to consider, things to be looking at. Now, again, I think it's very important, though, that we are paying close attention to the big indicators on the broad market. Because, again, we look at the Nasdaq coming into a major level, and it's important that we're looking at the Nasdaq because it's getting beat up the most, in my opinion, compared to the S&P 500 and the Dow. I think that's very clear right now. So I'm hyper-focused on the Nasdaq because it's carried us for the better part of this past year. Now, we go to DXY. And if you don't, the dollar and the yield have been one of the biggest indicators on continuation, risk on versus risk off. Okay. Despite the pain that we're seeing in kind of the stock market right now on the daily chart, right, the DXY continues to break down, coming back into low levels back in March, potentially even January, right? We go further, and this is where you're really going to see the attitude of the market is the 30-year yield. And this is something that I've been screaming at you guys for a while now, is when the 30-year yield gets below 4%, you're going to see investors really, in my opinion, swarm back into the market. The only hiccup here is where this is happening as far as on the timetable. I would rather this not happen going into, potentially September and, into the election. Not a huge fan of that. I'm not going to lie. But, what has happened so far? Like, let's just really quickly revisit, again, what's happened up into this point. Let's clear the chart off really quickly. And let's just throw the S&P 5. Let's throw QQQ. We'll throw QQQ on here. Can't. Love my Mac. Love my Mac. It's my favorite. Yeah, it's just not showing up now. Love that. Cool. Anyways, back into this, though. Worth mentioning. Anytime we've seen a decrease on the yields or anything along those lines, you've seen an immediate follow-up on the market getting love. So that's very important to understand. You can go back and look at the history for yourself. We've covered a lot here on the channel. The biggest thing that I've been waiting for is to get back below 4% on yields. And I've been saying this for kind of a year now, to be totally honest. So worth mentioning, right? That's that level we want to get back below. And you're getting closer to that point. If we go back here, what happened the first time we broke? I think it's very important that we identify what happened the first time we broke this level. Back in November of 2022, when really chips and the SPY found a bottom, right? You broke down, and then the beginning of the year, December, you held below 4%, you regulated there, and guess what happened? The market found the bottom and got very bullish until you broke back above 4%. So it's very important that we understand what's happening here too. TLT is more of the investor standpoint, people buying bonds long-term, etc. Okay? Bonds have been in a longer-term downtrend. Very important to understand this. And you are clearly breaking out, bottoming out, pushing back to the upside. You have room into like 120, 118 on 20-year treasury bonds. Okay? This signifies more the health of the overall market with rate cuts, etc. Okay, these are a lot of areas that we have to be paying attention to. Another big area too is mortgage rates. Okay, I'm going to be very clear about this. Mortgage, I think it's mortgage rates today. I think that's the website. Pretty positive. I'm not on my desktop, so I'm all over the place today, guys. I apologize. Mortgage News Daily. It's my favorite one to use. Okay, so just really quickly going up, you can just see the average here. Okay, the 30-year fix is at 6.4%. Okay, it's dropping pretty dramatically. If we really look at that, that is a very dramatic drop, no matter how you want to put it. Okay, and this will continue to drop rapidly. Okay, especially when they cut rates, this will drop closer to 5%. And what have we seen every single time that rates have dropped? It's very important to understand that. Every time rates have dropped, we've seen the housing market stimulate. And I'm talking specifically mortgage rates. And rate cuts will affect this even more dramatically. So things I'm looking at, broad market, and that what I'm paying attention to. Okay, oil's dropping too. I do think Israel, Iran could impact oil's prices. We'll talk about that later in another video. I just don't want to cover it today. That's my favorite thing so far on the market today, guys. If you have questions, comment down below. I'll have some stuff posted on Twitter. I appreciate you guys. Have a good one. I'll see you tomorrow.